Hi there. Today is Sunday, April 3rd, and I'm going to do a weekly update on the S&P and also kind of a longer term understanding of where we might be given the present market status. So we were talking about the 1929 market last time, believe it or not, as having an exceedingly similar pattern to this present market 92.3 years ago. It was doing the same thing. Of course, it did it much more dramatically. We had a 50% break back there in September, October, November of 29. And this time we had a 13-14% break in the S&P. Of course, that's not the same, right? But the timing and the high and low points, the swings were almost identical. As a matter of fact, when the pattern recognition program was looking, the computer search through the 120 years of data that we had, it puts that up at the top of the list for the last 12 months in terms of the highest correlation to the present. And what you never believe, the second highest correlation is 1987. But it's not at the crash point, it's actually after the crash point. And again, the crash in 87 was huge and this one wasn't. So what's going on? Well, it turns out that our long-term perception of the market is that indeed the major cycles, the big cycles, 20, 30, 50, 60, 80-year cycles, they have pivots at 7, 10 years apart. And we are probably at the early stages of a at least three-year bear market. So I'm still bearish ultimately for some period of time. However, in the short term, it looks like the February 24th low in the S&P will hold for a while or possibly get taken out. And if so, it would happen between now and June. Because after that, after the end of June, there's a good chance the market will rally over the summer into September, into the Labor Day area, and then have a fairly nasty fourth quarter. But I don't expect, based upon the patterns that happened in 1929 and elsewhere, which we're looking at, that the continuation of the extreme nature of the bear market will happen until next year, until starting around February of next year. So we're expecting a low coming in the next 2 weeks, probably around April 14th, possibly as late as April 20th, and possibly there's another low around May 10th or 11th. But what I wanted to bring up, and the reason I'm doing this right now, is because there's a chance that the next 2 weeks could be fairly bearish. And I had mentioned the 7th, 8th, or 11th of April could be high points. I think it could start earlier. It may have started last week on the 30th. And this week, the 4th, 5th, 6th, 7th, and 8th, we expect there's a chance the market will go lower and possibly go lower early in the week, the 4th and 5th, have a little bit of a bounce until Friday the 8th, and then have a very dramatic decline the 12th, 13th, 14th. So some sort of ABC kind of correction. Now, the 1929 market did a dip exactly here. It did not make a new low, did not take out the crash low, which would be the equivalent of our February 24th low, but it had a fairly significant dip down to the equivalent of April 14th. And you can see that in one of the three charts, the first of the three charts that I've been looking at. You can see the 1929 market above and the year 2000 market below. Those are two of the best matches. And it turns out that the year 2000, 22 years ago to the day, has been repeating. It's the best match for the last 4 months, for the last 88 trading days. And it has a harsh down day starting tomorrow on the 4th, and it has another really sharp decline from the 12th through the 14th, where we could go back close to the lows. And given the markets will never be exactly the same, it is even possible we could take out the lows. But something severely negative is probably going to hit the market in the next 2 weeks, and it possibly starting tomorrow. So that's why I'm doing this now, is to alert you. It may not wait until the end of the week. It could have started already a dip that is likely to be worthy of being short, or at least being aware of, and not buying until after the 14th of April. Okay, so that's the point. So in that chart, you see the relationship between the 1929 market and the year 2000 market. And the year 2000 market, in this other chart, you can see the present market and the year 2000 market, one on top of the other, and they're very, very similar. And it gives you a sense for what will happen going forward. It turns out the next few months, the market goes sideways. And it may do so until July, and then it has a rally until September, which matches quite closely the pattern in 1929, which had a 5 or 6 month rally off of the crash low until it reached the middle of 1930. At that point, they agree, and turns out the decline from 2000 to 2003 in the stock market, and the decline from 1929 to 1932, back then, 92 years ago, it turns out they had the exact same size time-wise. They both last 31 months from there, from where we are now. And that's pretty unusual. And you can see, again, in the two where 1929 is on the top and 2000 is underneath, what goes forward about a year, that you start seeing the beginnings of what would have been the bear market. It would continue to go lower in both of those charts for another 2 years. So we're not out of the woods in terms of a long-term bear market. However, most of the next few months, the market will attempt to go up. It may not get very far up, and it may turn into a very erratic trading range type pattern. But continuing to short it, you have to be very alert to be careful when to do that, and you might consider buying it around the 14th of April, because the next swing in the market is likely to go up at least until the 26th or 27th of April. All right, so that's our update for the week. I wanted to tell you our 1 week automated trading system, which has been extremely accurate for many, many years now. It's been better than usual lately, and we started selling the signals on February 27th was the first time we sent out signals to clients. It's had 6 trades since then. The first 4 were winners and 1 was a loser, and right now it's in a winning trade. At the moment it's short since the 30th, and it'll be getting out of the trade soon. So you might consider looking at that. Our website, which is not the YouTube site, it's an actual website for a company called tradesthefuture.com, and on there it provides you with kind of a summary of all the different products and services that we're offering. And we're doing that because, ultimately we've developed a lot of tools over the years, and some of them are very easy to use, and we are very proud of them, and we want you to have access to those things. We've been doing this with professional traders for many years, so now some of the public is going to start having a little bit of a kind of a balancing the scales. So that's it, and I hope you have a successful trading week. Apparently, astrologically, tomorrow is a very famous Mars-Saturn planetary war, and some of the astrologers think that's the reason the market will have some trouble the next couple of days. And there's some other things that happen that are kind of unusual. So there could be some weird stuff going on politically and throughout the economic world over the next 14, 15 days. And I want you to be aware and alert and careful. If you're not going to go short, at least protect yourself. Okay, thanks a lot, and enjoy.